Hello and welcome to today's live webinar where we look at the ASX investment opportunities in review. Presenter today, myself, Leon Hind, Managing Director of Investor Signals, and any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances, and realise that not all investments are appropriate for every individual. Up on screens, the performance of the ASX 50 model portfolio, and increasingly we turn to the algorithm model as a structure to make investment decisions on the timing of sort of the higher high, higher low bullish pattern in the market, and the negative obviously being that in reverse, being lower lows, lower highs. The performance of the model portfolio this year to date continues to outperform the market. The model's up roughly around 13%, and during today's recording we'll have a look at some of the holdings and the recent additions to the model portfolio. We are running a special where you can become a subscriber to the technology that I'm presenting today. The professional level access, which is normally $3,960, we're running a special for $1,320 for 12 months access to it. And if you'd like to take advantage of that, please visit investorsignals.com or email or phone the office. Moving into the recent signals for the ASX. So what we're doing here is we're clicking on watch list, coming across to the drop down list, selecting ASX signals from the bottom here. And what this does is store the last 7 days of algorithm long and short signals. And we're going to just roll through those signals over the last 7 days and identify the stocks that we want to bring across to our watch lists to identify buying or selling opportunities within. So all these columns across the top are interactive, so you can sort by percentage, greatest loss to the top or gains to the top, and all the columns. So for example, if you click there, you can sort alphabetically. Over on the right here, it has whether it's under buy or sell conditions. What we're going to do today is click on the first stock in the list and use the toggle arrow up on the top of the charts here, and we're going to move through these recent signals and make a note of the stocks that we want to bring across to our watch list. So APN News and Media, so what the algorithm engine is flagging here is the stock's broken out to a higher high. It's had a pullback, and we now looks like the stock's starting to move higher again, and we've got support here around 234. AFG not doing there at the moment, but the stock's broken lower, made a lower low, rallied back, and now likely to run in a resistance around this 163, 170 level. BlueScope Steel, so if we look at the history here, originally it was under sell conditions and it was added into the model back here in 2016. The stock continued to perform well, and then it was removed from the model in late 17. And then when it switched from sell conditions here back into buy conditions, it was then added back into the model at $13.38. And since then, the stock's continued to make higher highs and higher lows, and we're now sitting on a support level here of 1664 in BlueScope. Sims Metal, so it's had a retracement back from $18 down to $14. We've got an algorithm buy signal here around $13.70, and the stock's pushing back up to $15 at the moment. Not doing there in MNF. S32, so we don't mind this now. Our preference within the resource space is still Rio and BHP. But the retracement here in South 32 from $4 back to $3.40, and we've got an algorithm buy signal. I'll shuffle that support line up under the low there of sort of $13.30, or $3.30, I should say. But just mindful that there's further structural support there at around $3.10. For most of these resource names at the moment, we're looking at selling covered calls to try to enhance the returns there. Rio, so this is one of our preferred exposures at the moment with the share buy, with the sheer size of the share buyback and capital return that the company's conducting. We think it underpins downside risk here for Rio. So on balance, buying Rio here, looking for a rally back up to around $78 and selling covered calls makes sense there. If we look at the trends within the algo model, it's gone from sell conditions in early 16 into buy conditions in early 17, and the stock's continued to perform well. Not doing anything in RMS at present, but just flagging there that the higher low at around 46 cents. IPH looking for that to run into resistance between sort of $5.50 and $6. Telstra. Now, we've had an algorithm sell signal here in Telstra, which is just a continuation of the lower low, lower high pattern. And the rebound that we're having at the moment will likely run into some shorter term exhaustion. But the longer term story for Telstra, I think, around the separation of Infrastructure Co. away from Telstra Retail, ultimately unlocks value for shareholders, albeit it may be 18 months, 2 years before that separation occurs. But the probability of the low being in for Telstra would be quite high at the moment. The latest earnings result really just came in the middle of guidance, and that was enough to cause the stock to rally. But the longer term value being unlocked through the separation should bode well. So we're certainly not under buy conditions, and really what we're looking for over the next 6 to 12 months is a move higher, a retracement back lower, and an algorithm buy signal before you really got sort of aggressive or set up for a long-term recovery in Telstra. Dexter's not doing there at present. Healthscope now. Healthscope report their earnings in another few days. I've highlighted that date. I'll come back to that in a moment. My view here is that we had Healthscope on our high conviction list, and what we're looking for is price to come back and fill this gap, and it really has touched there. If we zoom out a little, we had a strong reversal on the day that the low of 208 filled sort of that price gap there of 207. So it came within a cent of sort of filling that, and now it's rallied almost 10 cents off that low. And now the next catalyst is we look at the upcoming earnings result to drive Healthscope higher. It is a long-term buy rather than sort of a shorter-term trading position is our view there. Bramble, so the algorithm's just flagging the lower low and the lower high here, and for that reason we've taken a bit of a cautious approach to Brambles and sold tight covered calls to protect that position. Fletcher Building, our preference is CSR, but you're seeing a minor higher low pattern there in Fletcher, not enough for me to sort of get excited about the opportunity there. Our preference is still James Hardie and CSR. Cash converters, not being there at present. Bank of Queensland now. Across all the 4 majors and the 2 regionals, Bank of Queensland and Bendigo, we've got lower high formations. The recovery that we've seen in the banking names have been from oversold conditions and for the short term being supported by good dividends. There are some risks around credit quality that I think ultimately play out and create further downside for the Australian banks. Where we're at the moment, whether sort of with it, I suspect we're within sort of 5% of the top being put in place for these bank stocks at the moment, and it might be just something that you need to keep in mind with your portfolio allocations. Just skipping through a few of these, we're not doing anything across these names. Metcash, just a bit mindful there, the lower low, lower high. I think that probably rolls over and ultimately struggles below that lower high formation, as with NIB Holdings, or NIB Holdings, I should say, and back to APM. So they're the signals from the last 7 days. The main ones that sort of capture my attention are probably the Rio signal and Healthscope. And we'll have a look at a few of the other ones on the high conviction list shortly. Before we look at those high conviction names, I just want to go through the US Dow 30 just to have a look at sort of the backdrop in sort of these large US stocks. And that leads into my view that the markets in Australia is likely to mostly trade sideways. So if we look at Apple, under algorithm buy signals, we've seen Berkshire Hathaway take a very large position in Apple. Some analysts have upgraded their price target as high as $300 in Apple, but we're starting to see that sort of continuation of that higher low. American Express, the company's buying back a significant number of shares. That's one of the attractions that Berkshire Hathaway has to staying long or maintaining their position in American Express, is the sheer number of shares that are being cancelled as a result of the share buyback. So we expect that to continue to remain well supported there. Boeing, we've seen this bounce off, so we had the algorithm buy signal here at around 330. The stock's consolidated after a great run over the last couple of years. It's consolidating, and we're just highlighting support there around that 320, 330 level. Caterpillar, we've seen this sell off on concerns around China slowdown, but a correction from 170 back to 130, probably getting pretty close to support. Cisco reported their results last week, I think on Thursday. Earnings grew by about 6%. And the outlook here for Cisco remains quite robust. Support there at $40, and I think it consolidates but ultimately moves higher. All the energy names in the US look to be under pressure and rolling over a little. Disney, so they've acquired Fox assets, and they beat Comcast to the in the bidding process for those assets, and we've seen Disney rally off the back of that. But really, if we look back at what the stock's done over, say, the last 3 years, it's mostly moved sideways with around sort of $90 to $100 being support, and up at 120 is where resistance is. DuPont, Dow DuPont, we're looking for this. Ultimately, this company will get broken up into 3 separate divisions. The first of those spin-offs occur in early 2019, but it's under sell conditions at the moment. Goldman Sachs actually quite like this from a value perspective at around 215 to 230 should provide good support, and we'll continue to have a look at sort of the earnings growth in Goldman Sachs when we do revisit these US stocks. Home Depot, not doing there at the moment. IBM, so interestingly that Berkshire Hathaway sold their IBM stake and replaced it with Apple, and that's really weighed on IBM's share price, but maybe around this 140 level, just highlighting that it's under algorithm buy conditions and looks like we're starting to develop some support there. Intel, so these chip stocks globally have been under pressure, and it might be an area just to have a think about, that if we get a little more selling and a dip below $45 in Intel, it may provide a good buying opportunity there. Johnson & Johnson, this is one just to keep an eye on a lower high formation, so we'll just look for that stock price to tire up at around 138, 140. JP Morgan, the global banks all seem to be under lower low, lower high conditions at the moment. Coca-Cola's sell condition, McDonald's is sell conditions. 3M, so the big global industrial companies still look okay, so Honeywell, 3M, etc. Support here at around 190. Merck & Co, they're looking expensive. Microsoft had a terrific run, and we'll just wait for it. So if we look at this, it switched from sell conditions into buy conditions early 2016, and the stock's done very well, but we'll be patient and wait for the next buy signal. Nike, we switched from sell conditions into buy conditions in 2017. US retail has been a real strength, or the recovery in retail and consumer spending has been a real highlight of the US economic recovery, and Nike's been one of the clear beneficiaries of that. Not doing there in Pfizer at the moment. Again, you can see it switch from sell conditions to buy conditions, and the stock price has done very well since then. Procter Gamble, look, I think this is one that you are worth just pausing and having a think about on the short side, up at around this $85. I think it runs into resistance. Travelers, so it's switched from sell conditions to buy conditions on support here at 120, and I think that looks okay. United Health, well, just to jump back to United Health, it is one of the better performing stocks in the model, so we can see here the continuation of higher highs and higher lows, and the stock's done very well off those buy signals. United Technology, so the most recent buy signal here was at around 115. So Visa, MasterCard, American Express have all done very well with the strength in the consumer market in the US. Verizon, probably one of the leaders in 5G technology in the US, and we've seen that rally from 46 up to 54. Walgreens, not doing there. Walmart, so Walmart's traditional brick and mortar retail business, but they're certainly starting to win ground back off Amazon as they push into a a much more diversified online strategy as well. The latest earnings result beat market expectations, and Walmart jumped 10% off the back of that. You can see there that we had the recent algo buy signal at around $82. Exxon under sell conditions. So again, just pointing out those energy names having lower high patterns. And there we are back to Apple. So I don't think it hurts, maybe once a month just to toggle through either the Dow 30 or even come in and have a look through the S&P 100 stocks, just to start familiarizing yourself with some of those US names. But it certainly just helps to set the scene as to which sectors are doing well, and that can flow through to helping with some of your decision making on the ASX. Okay, on that note, let's go into the model portfolios. So what I've done here is click model portfolio, selected the model that I'm after from the list. If I want to ensure that I'm being emailed when there's an adjustment to that model portfolio, make sure that envelope's clicked on, which will be green. If it's off, it'll be grey. So you can go through and turn that on for whichever model portfolios you want to be notified about. Up on screen at the moment is the ASX 50. So if we start by so again, this column's interactive. If we click on it, you can sort it in ascending or descending order. What I've done here is got the least number of days at the top. So this means that this stock's been in the model for 32 days, 39 days, 56 days, etc. So if we have a look, new Crest is up 2.8% since it was added. It was originally added on the 19th of July, and that's a stock that we like at the moment, and I'll have a look at that. It's on the high conviction list. Sydney Airport's another one on the list, so as a buy right, it's up 3%. South 32, trading below the initial entry price, and that's one that we covered earlier. James Hardie, so I actually don't mind that, and we'll have a look at that shortly. Computer shares done extremely well. The earnings result came in initially a little bit below market expectations, but I think a combination of the strong US dollar and the prospect of the company growing earnings 10% next year, the markets continue to stay exposed to these US names that have earnings growth, that have exposure to the US dollar. Computer shares up 13%. Santos Oil Search up 25 and 30%. Qantas up 31 since it was added. Medibank, I think, is getting a little bit expensive where it is at the moment, but it's up 24%. The two underperforming stocks in the model by a wide margin remain AMP and Fortescue. And then obviously we get down to Rio, and you can see the performance of the other names there that have done very well. I also just like to come in and click on the top 100 model and have a look at which stocks have been added recently here. So Seek, I'll just click and we'll go in and have a look at that. Actually, before I do, so let's just recap where we're at. Seek was only added 13 days ago. It's up 12%. Newcrest we've covered. Evolution Mining, that's one that I've added to the high conviction. I think around that 265 level, Evolution should be good buying. Downer EDI has been on our high conviction list. And I'll go in and we'll have a look at the charts for some of these shortly. And so you can go through and see the performance of the top 100 model. Okay. Let's, before we have a look at the high conviction list, I just want to bring in the earnings calendar, and we'll have a look at where we're at. At the end of last week, if we just recap, so we did the webinar there on the Monday. If we recap, Computer Share delivered 10% forward guidance, CSL 10% forward guidance, IAG disappointed a little bit with slightly lower guidance. Seek, the market's been very patient there. The company delivered flat earnings growth, but reaffirmed that in 2020 they see earnings picking up to that 10 to 20% mark, and the market's been patient and sticking with Seek. Wes as a conglomerate delivered 5% earnings growth. ASX, very good result, about 6% earnings growth. Downer EDI is one of the high conviction stocks we had. The result came in line for 18, but FY 19 being upgraded to 13% earnings growth. Origin disappointed a little, and we'll cover that in a moment. Sonic guidance was a little bit lower at 3 to 5%, so you've seen that stock retrace, which is something we were looking for as a buy on the dip, so we'll review that shortly. Evolution, really came in line with expectations. Link better than expected. And then today we had Ansell, which was one on the high conviction short side, and that's disappointed. So in the stock's off about 6-7%. So we'll have a look at that in a moment. Woolworths came in maybe just a fraction below expectations. And then tomorrow of interest, we've got Amcor, BHP, HealthScope. So there was the date that we're looking for there on HealthScope. So that's tomorrow. Wednesday, Coca-Cola. I think that result could be a little bit soft. Crest will certainly be interesting. Iris on 23rd. So we'll watch that, thinking that that may be a little bit soft. Qantas will be an interesting result to have a look at, just to see whether the comments around fuel prices and hedging coming off. South 32, we'll probably look for that to support the share price. Stockland's a bit concerned that the lower high pattern there, and you may want to be thinking about selling into this rally that it's having at the moment. Brambles we've covered. Medibank, just mindful that the last two earnings results have showed very little in the way of revenue growth, so not sure there's much room for a positive surprise there at the moment. Star Entertainment, we're bullish on that, thinking that the VIP gaming looks better than the market is pricing in at the moment. So take that out of screen. We'll bring in the notes for you to have a look at, and then we'll start having a look at some of these stocks. AZJ, the stock's making lower lows, lower highs. This is a really early entry onto the watch list, but it's just one that later this year we want to keep an eye on, because I think ultimately that creates a trough, and we look for that to move into a higher low formation. Sonic, we've been watching this for a buy on the dip. The slight disappointment in the earnings, anything back down around $25, sub $25 provides a buying opportunity, and we'd expect to see an algo buy signal, probably both in Sonic and Woolworths, as this retracement in the price plays out. So Woolworths is another one, the slight soft earnings result. We've seen that. We've been looking for it to pull back to around $28.50 ex-dividend. That's about where Woolworths will be trading. So there will be an opportunity to pick it up at near that $28.50 level. CYB, I think just keep an eye on this as a buy on the dip opportunity. The target there's around 550. So again, maybe in the back half of this year we see an algo buy signal there. Ramsay Healthcare reports on the 30th, so we're seeing money come back into some of these more defensive names at the moment, and Ramsay might be getting down to a level where it's just worth keeping an eye on that. In our high conviction group, so Rio, I think buying that on the dip here at the moment. APA Group, and I'll bring up the charts for these in a moment. So APA Group's really hit our target. We're looking for that to trade $10, maybe $10.50, but I think there's nothing wrong with taking profit on that at the moment. HealthScope, it's a long-term buy and hold. It's filled that price gap. It'll be interesting to see what the earnings result looks like tomorrow. Crown was one of our high conviction ideas coming into its earnings result, delivered a great result, but really fully priced at the moment. The way to play Crown, if you're still holding it, is just to sell covered calls over it. Downer EDI was a high conviction. The original buy signal was at $6.60, is now pushing up to almost $8. Anything close to $8, I'd be inclined to just take the profit on Downer. Origin, this sell-off that we're having at the moment, I think creates a high conviction buying opportunity there, so continue to watch that one. Tabb Corp's really hit our profit target, so that game was an earlier high conviction, and if you're still holding that, I think selling covered calls is the way to play that. It's close to full value. Now SGR reports on Friday, or on Friday, so I'm looking for that one to maybe trade up to as high as $5.50 off the back of good VIP gaming revenue. URW, I've been chatting about this one. They report, it's actually on the 29th, not the 31st, but buying that through Saxo just to avoid the tax implications of buying the CDI on market. That's one that I expect the synergy costs post the Westfield acquisition should provide some support, and I'm probably increasingly confident about that given the low or the retracement in US bond yields that are helping to see money come back into some of these defensive names at the moment. Evolution at 265 is a buy. New Crest just highlighting again that it's been consolidating for 2 years here at around this $20 support level. The sell-off in gold as a result of the US dollar rallying, probably that whole theme starting to mature, and it should set the scene for a rebound in gold prices, which should help New Crest. Moving into our general buy signals, CSR oversold, but just cautious on housing data. So you just might need to think about running stop losses in some of these housing exposure names. IAG, still comfortable with that as a buy right, even though the earnings was a slight miss. JB Hi-Fi over Harvey Norman. That's played out reasonably well with JB Hi-Fi, I think, doing better and providing a lower risk opportunity than Harvey Norman. Link has rallied from $7 to $8, and we just got to be patient there and wait for a pullback. Medibank I've covered. CIMIC now, if you haven't been following these recordings over prior weeks, CIMIC was one of our early high conviction ideas coming into its earnings result. The stock rallied 20%. At $49.50, the stock's on a 3.3% yield. So it's really looking for any weakness in the market that creates a buying opportunity to buy CIMIC on lower levels. And I'll keep an eye out on that, and I'll add to the blog should that opportunity arise. Sydney Airports, that's done well, and from originally a $7 buy signal, now trading $7.30. Buying it and selling a covered call, you're delivering 10-12% cash flow. Oz Minerals, so some of the James Hardie we'll have a look at, BHP. Then on the sell side, so what we'll have a look at shortly is Ansell, its result came out today and disappointed. I've highlighted the banks under lower lows, lower high conditions. Stocklands I've covered. Coca-Cola reports on the 22nd, thinking that could be a bit soft. Iris thinking that could be soft on the 23rd. Cube might be one that you just like to have a look at as a lower high formation, and Dominoes lower high following EPS miss. In the US, one of the stocks that I'm looking at the moment is Wynn Resorts. It's been sold off heavily off the back of weakness in Macau, and with the stock correcting from $200 down to $140, it looks like it's approaching oversold conditions. So we'll continue to just watch a handful of these US stocks to start to introduce some coverage of that into these reports. Okay, now let's just go back and have a look at some of these on the chart side. And Sonic Healthcare, so earnings came out. 2018 was in line with consensus. 2019 was downgraded from around 6% earnings growth to around 3 to 5% earnings growth. So if you see Sonic pull back below $25, maybe trading $24.75, I think that creates a good buying opportunity. Sonic's due to go ex-dividend so it'll go ex-dividend 50 cents on the 12th of September. So between now and the 12th of September, just keep an eye on Sonic, and if you see it back down around this sort of $24.50 to $25 range, I think that provides a good entry opportunity for Sonic. Woolworths earnings result out today. Revenue growth around 3.5%, underlying profit growth maybe around 9-10%. The initial reaction was quite heavy, but given that the stock's still yet to pay its dividend, they'll pay a 50-cent dividend on the 7th of September. I've highlighted here that this is a value range for Woolworths. Now, if you're accumulating it within this range, I think you want to be pretty aggressive with selling maybe a $29.50 covered call over the stock. And again, that would then turn sort of a 4% dividend into something in the order of 10 to 12%. Plus, you're still getting exposure to the franking credits. CYB, just to have a quick look at this one. So pull back to around 550. It's not there at the moment, but we're keeping an eye on that. Ramsay Healthcare are down here. Earnings result on the 30th. It'll be worth just having a look at what that earnings result's like. On the buy side, on the high conviction, I think accumulating Rio as a preferred resource exposure. APA Group was the takeover bid that we've been watching there, but just taking, if you did buy it at these lower levels, I'd be starting to take profit. I don't think it's worth running the risk on FIRB approval of the deal. Healthscope, we've covered that one today. Crown, bring up a graph of that. Crown, the issue here at 23 times earnings, the stock's just looking a little bit expensive. So if you own it, sell covered calls over it, or look for a retracement in a soft market back to 13.50, and we're buyers of it again. Downer EDI, so this is one that was on the high conviction list. We had the original buy signal here at 6.70. As the stock pushes up to around $8, it's getting down to a low 4% dividend yield, and I think it consolidates and moves sideways up at $8. So taking profit and looking for other opportunities in the market is our preference there. Now, Origin, the earnings result disappointed a little. And the ACCC at the moment, combined with the government creating caps and intervening in the pricing plans that the retail electricity companies can provide, probably just weighs on sentiment, and I think it actually creates a buying opportunity. So keep an eye on Origin. Anything really sort of sub this 850 level off that 825 support should prove to be a good buying opportunity in Origin. Tabb Corp, this one, the opportunity is mostly over here in Tabb Corp. We're along this coming into the earnings result. It was better than expected and the stock price rallied. If you own it here at the moment, sell covered calls. I think Tabb Corp mainly moves sideways now. SGR, so this reports on Friday, and this is on the high conviction list. So we're looking for the result to be better on Friday than the market's pricing in, and thinking that that could rally off the back of that. URW, so this is one for CFD accounts, just again to make things easier with dealing with the tax treatment of buying Unibail. So looking for the result on the 29th to help push that maybe back over $15. Evolution Mining. If we see another leg lower back down around 265, that was the middle of our target there where we're looking to accumulate Evolution, and that's just a way of getting exposure to a recovery in gold price. The other alternative being Crest at the moment. Crest was added into the model portfolio recently. If we have a look over the last 2 years or more, it's really moved sideways off that $20 support, and just looking for it to break to the upside of that consolidation range. On the short side of the market, so if we just have a quick look at the Ansell, so this is one that I highlighted that this was a high conviction sell into the result call that we looked at last week. The earnings came in short of expectation. The stock's off about 6-7%. The other ones on the short side just to keep an eye on is Coca-Cola. So they report middle of this week. So just thinking that around that 950, 975 looks like it's pretty close to full value there. Iris. Thinking that at around this 1225, 1250 level, that looks expensive. And the other one that you may want to just note on the short side. And we've actually covered a bit more of the short side of the market today than we have previously. And that's really just a function of there's only a limited number of stocks that are actually bouncing off that lower or off that higher low buy algorithm signal at the moment. And that might just be a function of the rally that the XJOs had, and that some of these valuations are looking a little bit stretched. So Cube's another one that is thinking that it runs into resistance around this 260 level. And just to conclude today, we'll just have a quick look at that stock in the US, Wynn Resorts. So we can see here it's fallen from $200 down to $142. I've just identified value at 125 is the midpoint of that value range, and looking for the stock to find support there. So that'll be one that we come back and revisit in the weeks ahead. And just to conclude, we'll just jump into the top 50 stocks and just see if there's a. So again, Origin, Woolworths, Sonic, all pulling back into our buy zone. Medibank, bit cautious there on revenue. QBE's earnings result, the market was happy with the fact that there were no negative surprises there. Maybe the weak US bond yields caps any rally in QBE. The banks we've covered a fair bit on. So on the positive side of the market, Qantas is a stock that's in the model at the moment that's doing well. Computershare we've covered. New Crest, I think we've covered that. South 32 coming into its earnings result later this week would be one worth keeping an eye on. And just to confirm, South 32 is Thursday. BHP, buy right at the moment. James Hardie, we didn't actually look at the graph of that one, but this was a switch from sell conditions into buy conditions. Support here at around $21. Looking for this to push up to maybe $23.50, $24, and we probably look to take profit on that. So that's just a couple in the top 50. If we just jump in and just have a look at the top 100. So Ansell's now off 8%. Link, we're looking for that to pull back to around that $7.25, $7.50 level. We missed the initial rally from $7 up to $8, but looking for that on a pullback. Dominoes, I think that's one that you could add to your short list again. I think the earnings result, Dominoes only delivered 15% earnings growth. The market was looking for 20%, but it's very expensive on a PE basis, and I think it runs into resistance near this current level. You can see CIMIC's holding up very well, so you really need to see 3 or 4 nights of selling in the US for that to really create an opportunity. That may occur over the next few weeks. All right. Well, we'll leave it there. So again, if you're not already set up on a trial of the technology, visit the Investor Signals website if you'd like to take advantage of the discounted membership of $1,320. Please email or contact me at the office. I look forward to chatting again next week. And I'll just bring into screen those notes from today, just in case you didn't get those down. So I'll just move through these before I finish the recording. So again, on the watch list side there. And then we've got the high conviction ideas. And what we might do, because I think this one's, let's just help tidy these up now. And while I'm doing this, I'll give you a chance to take down some notes. So that's done. That's hit our target mostly. What's going on there? Okay, so on the high conviction side, I think Rio at these levels, Healthscope coming into the result tomorrow, down at maybe $8. You want to close that position out. Origin around that 8 to 8.50 level, so I might just add that in there. Like 8, so 8.50. Tabb Corp taking profits or selling covered calls. SGR, we got that as a high conviction coming into the result. These ones you can see there, we've covered those, and then getting down into the general buy signals. IAG, still comfortable buying that as a buy right to add income to portfolios. CIMIC, we keep an eye on that. And we can shift Sydney up into here as a sort of high conviction idea that we're running. And Ansell's, really played out as we expected. So hopefully you've got a chance to get the notes down there on some of those opportunities. But broadly, we're now looking for sort of a new group of stocks that retrace to create sort of new buy on the dip opportunities, which is just a function of, I think, the market pushing up, mostly up against resistance, that we don't have a large number of buy signals at the moment. Thank you for listening in.